All right, this is Business Express brought to you by InterSwitch on a Wednesday morning. This is the Smooth Breakfast here on Smooth 98.1. Love music, love life. It is 32 minutes past 6 a.m. Ayokunmi here, ready to walk you into a hump of the week Wednesday, smack dab in the middle of the working week. And what better time to talk about what's been going on in the business world in just about 15 minutes. You can join us as well by sharing your messages on WhatsApp. The number is 0809 You can also find us on YouTube where we're streaming live at Smooth 981 FM Lagos. Smooth 981 FM Lagos. And this morning we'll be talking about a report by ARM. Yes, they've released a new strategy report for the second half of 2025, which looks at global economic conditions. And for the purpose of this particular show, we'll be focusing specifically on Nigeria. Joining me to make sense of it all and give us some very much needed perspective is Ameerat Adamu. She's an investment research analyst with ARM. Very good morning to you, Ameerat. Great to have you once again on the show.
Good morning, and thank you for having me on your show.
Absolute pleasure. Looking at that report, of course, a lot of numbers here and there and so on and so forth. So you are the perfect person to connect all the dots for us, add all the twos to make four and so on and so forth. Let's start with oil specifically. Now, you are forecasting $62 for the average price for the second half of 2025. What exactly are your reasons for that?
Okay, so that's our base case. Our base case is actually $62 per barrel for crude oil prices.
Hmm,
So and it's basically driven by supply outpacing demand. So we're seeing the OPEC plus countries as well as non-OPEC plus countries
right.
gradually unwinding in terms of production. They're increasing supply of crude into the market, and non-OPEC players like the US and Brazil, they are ramping up their output. So at the same time, demand is softening in Europe and some parts of Asia due to weaker industrial activities and green energy transition that we've been seeing in few years coming into now. So
Hmm,
while there's still the risks of geopolitical tensions, especially like Iran and Israel tensions,
yeah.
which may cause some short-term spikes, which we saw in H1, where we saw a lot of volatility in the crude oil prices space. So our base case basically remains moderate pricing in terms of crude oil at
Okay.
$50.
All right. Thank you for that. Now, looking at the fact that there's a moderate pricing for crude oil, how will the movement of the oil prices impact Nigeria's revenues? Because you know that crude oil is like our mainstay when it comes to making money.
Yeah, oil accounts for basically more than 50% of Nigeria's exports. And
Hmm,
from a drop to $62 per barrel could impact government revenue for 2025. And we've seen the approved budget for 2025 at 54.95 trillion naira. And they are basically expecting average um, crude production of 2.6 million barrels, and we've not gotten to there. And just the first 5 months of 2025, we are still around 1.47 million barrel per day. And our budget is pegged with we're expecting crude oil to be at around $75 per barrel, and this is
yeah.
lower than our projection. So
Hmm,
this will be basically lower FX inflows, which would limit government spending on infrastructures and other programs. But however, our non-crude exports is booming currently, and we've seen it's at 37.1% of the total exports for just Q1 2025. And
okay.
our local refineries like the Dangote and Port Harcourt refineries would help to offset this decline that we're expecting in crude oil prices compared to our budget forecast.
Hmm. Good to see the non-oil export sector, picking up and playing a part in all this as well. We've been shouting this for such a very long time. Anyways, still talking about the report. You have you have a base bull and bear case for Nigeria's GDP growth in 2025. Can you share what your projections are with us and some of the triggers?
Okay. Sure. So for 2025, we project GDP to grow at 4.13% for our base case, 4.25% for our bull case, and 3.75% for our bear case. So our outlook is anchored on the resilience of the services sector, which has continued to drive growth in for a number of years now. If you look at the trend, services sector is basically the primary driver, and especially with the boost from 50% tariff hike that we saw earlier this year, and
Hmm.
this would create more room for the local players. And we also see support from relative stable FX and interest rate environment, which should help both the industrials as well as services sector also. And in terms of oil refinery, that's also another bright spot, especially with
Ah,
Dangote refinery and
yeah.
other local plants, which we've seen them resuscitate and all of that. And agriculture, yeah. So while there's still challenges of insecurity, poor infrastructures, and all of that, and we still expect it to post a modest growth. And thanks to the targeted government supports and also their interventions basically in that space. And however, crude oil production, it remains a structural weakness. So, as I said, we actually expect it to average 1.5 million barrel per day, due
Okay.
to all the long-term issues, theft, pipeline vandalism, and basically just all the structural issues surrounding that space. So overall, we are cautiously optimistic basically on the Nigeria economy, and we believe that Nigeria economy is on a path to modest but sustained growth for 2025.
Modest but sustained growth for 2025.
Yeah.
That is actually very interesting. Now, looking at your projections, what GDP are concerned, about 4.13% or thereabouts, and looking at that number, what does it tell us in general? Is that a good number? Is that an average number? Is that a bad number? I mean, looking at where it is that we need to be going to.
Okay. So that's based on our projection, right?
Yeah.
So that's actually a good number, if I would say. So it's actually an improvement from what the full year 2024 GDP growth rate was around 3.4%. So even our bear case is still relatively higher than what we had for full year 2024. So it's a good number.
Okay. Fingers are crossed on that one. Anyways, the NBS, that's Nigeria's Bureau of Statistics, they actually yet to release the rebased GDP and first quarter figures for 2025. Uh, does that alter your outlook in any way at all?
So the delay in the in Q1 2025 GDP data and just the rebasing figure, um, it creates short-term uncertainty. I'm not going to lie, but that doesn't shift our projection, our growth outlook for the Nigeria economy. And as I've said, it's based on robust trade figures, and especially with Q1 2025 trade at around 38 trillion. And we had a 5.18 trillion surplus, I believe, plus our naira stability that was seen. So the rebasing, why we expect it to adjust nominal values, that's the nominal GDP, that could lower our debt to GDP ratio and also give a better view, a better outlook of the size of the Nigeria economy. So overall, the rebasing figures that we've not yet seen, yeah, it creates uncertainty, but um, it would enhance the outlook for Nigeria economy rather than distort it. And as as I rightly said earlier, strong services and agriculture and oil sectors would keep our projections intact.
Hmm. Right, good to hear that. Now let's talk about inflation because in the report there's also an outlook for that.
Yeah.
Do you see continuing deceleration? Are we going to continue on that downward trend when it comes to the inflationary numbers, or anything else going on there?
Okay, so yes, cautiously. So inflation slowed from 24.48% in January, that's on a year-on-year basis, to 22.97% in May. And this was driven by the rebased CPI basket and high base effect from 2024, where inflation peaked at 34.80% on a year-on-year basis, and
Okay.
so the government tariff suspension on grains, naira stability, and the lower petrol prices that we'll be seeing from Dangote refinery. And so yes, that will lead to a continued deceleration in our inflationary numbers, especially the high base effect. So we forecast an average of 24.28%. That's for our big base case, assuming that the naira stabilizes at within the range of 1,535 naira per dollar to 1,565 naira per dollar. And also the stable prices from local refinery, that's the Dangote refinery, basically. However, food inflation remains a key risk due to insecurity and poor infrastructures and logistics issues. And this could push average inflation at to 25.86% at year end. So while the trend is down, it is not a straight line.
Not a straight line. And it's interesting to talk about food inflation. I mean, if those things that you mentioned, poor infrastructure, logistical problems are still there, we might
Yeah,
still be battling with high inflationary numbers where food
exactly.
actually is concerned. You also talked about the exchange rate. I mean, are we going to see a maintenance in the 1,500 naira to dollar level to close out 2025, or is it going to, spike or drop, or what's going to happen there according to projections?
Yeah, we're expected to maintain the 1.5 around the 1.5 level. So the Naira actually performed better than expected so far this year. So it's
Hmm,
appreciated by 0.4%. That's on a year-to-date basis at the official window, from moving from 1,535 Naira at year end 2024 to 1,529 Naira by end of June 2025. And we also saw that in the parallel markets, the Naira also appreciated even more than the official window, um, appreciating by 4.29%. And we saw that the gap between the official and parallel window has narrowed
hmm.
this year to 32 Naira 79 kobo, compared to where we had a range of 96 Naira 68 kobo. That's in terms of the gap between official and parallel window in
Okay.
2024. So yeah, we expect that the Naira will remain stable within the 1.5 region. While exactly at 1.5, not likely, but
Ah,
yeah, we expect relative stability.
hmm. Within that 1.5 something range thereabouts. All
Yes.
right. So thank you, Amirat, for that. Very quickly, before we wrap it up, as time has absolutely flown by, are there any headwinds facing the growth trajectory or our growth trajectory in Nigeria here going forward?
Yeah, there are a couple of them. So first we have oil production, which is still below government targets at of 2 over 2 million barrel per day, and averaging just around almost 1.5 million barrel per day. And that is limiting the Nigeria fiscal space and also limiting our FX inflows, especially if it gets to our projection of $62 per barrel for our base case. And
Hmm.
secondly, we also have insecurity, which we have been mentioning a couple of times on this call so
Yeah.
far,
Yeah.
for the agricultural zone. And this has been disrupting farming activities. And if this worsen or if flooding occurs, especially in we've seen a couple of flooding announcements in food producing regions. So if this keeps up, it's going to affect our growth outlook basically. And finally, we have FX inflows, which I mentioned. So Nigeria is still basically dependent on oil exports and also for foreign inflows, and any disruptions basically on foreign portfolio investments or oil inflows, um, be it commodity shock or capital outflows actually, could weaken our reserves, that's our foreign reserves, and
Okay.
this would also bring about exchange rate volatility back again, and that won't be good for our growth outlook.
Hmm. That won't be good for the growth out. We definitely do not want that to happen.
Definitely.
Really and truly. All right, let me take a message here as we wrap it up. This is from Gilbert Musa. He's in Festac. He says, interesting that data from the non-oil sector is improving gradually. But the question is, in all this analysis, has domestic spending improved from 2020 till 2024? The answer is a big no. The impact is zero to the average Nigerian on the streets. An interesting take from Gilbert. I know we're out of time here, Mirad, but uh, we talk about numbers a lot, drop here and so on and so forth. But when we
Yeah.
talk about the impact on the average man out there, it doesn't seem to be as significant as those numbers would actually tell. Could there be a particular reason for that?
Okay, so let's use the example of inflation. So even though we see that inflation is decelerating, people might be like, oh, but I'm not seeing prices of things going down and all of that. So it's basically just showing that yes, it's decelerating, but it does not mean that we expect prices of things to actually come down. It's just that at the rates that prices are going up is not rapid. So
Hmm.
seeing a decline at the rate at which prices are going up. So yeah, for the average man, when we actually sit down and look at things, we'll see that okay, at least the price we bought maybe something last month, it did not the range, like the difference between last month price and this month's price is not that significant than we've seen
Hmm.
like previous months. So yeah, we are seeing an impact on the average man, but it's not that significant that oh we can just point out that oh yeah, I'm seeing the impact on my as a cost of living or something like that. But yeah, there's gradual impact for the average man.
All right. Thank you for sharing that. That's been an interesting morning on Business Express. We've been talking about the ARM's second half of 2025 Nigeria strategy report, and Ameerat Adamu, who's an investment research analyst at ARM Investment, has been breaking it down for us. Thank you so much, Ameerat, for joining me. It's been a pleasure.
Thank you.
All right. Have yourself a great Wednesday and great rest of the week as well. All right, Lagos, it's been a great, great morning on the show. Thank you for keeping it tuned. Don't go anywhere. The Smooth Breakfast, of course, is in full swing. There's more sweet, sweet, smooth music coming your way. 7:30, we'll take a walk into the papers on Freshly Pressed.